Duane Duggan, RE/MAX Boulder video podcast. So today we have Jessica Shanahan from Premier Lens to talk to us about removing PMI, a very exciting topic. Thanks for being here today.
Thanks for having me.
Removing your PMI. It's a hot topic when values are rising because there's a possibility you could get rid of that expense. So why don't we start off, Jessica, with saying what PMI is, what all these acronyms we use, what they are, and what it is.
Sure. So PMI stands for Private Mortgage Insurance, and you'll sound really hip and like you know what you're talking about if you say PMI. But it protects the lender, the investor of your loan against default. So if you would go into foreclosure, it makes sure that the lender is going to get their money back.
Okay. And so on the surface, it sounds like something that may not be that exciting for the borrowers because it's an additional expense. But in reality, doesn't it open up a lot more funds for buyers to have low down payment loans?
Yes, it does. So PMI covers anytime you're putting less than 20% down. So for clients that are saving, thinking that they have to have that 20% down payment, PMI makes it possible for them to not have that amount down.
Okay, so they can buy earlier with as low as 3%
yeah,
down. Right?
There's first-time home buyer programs with as low as 3% down.
Okay, so in an appreciating market, it's important to be able to buy with low down because you can't outsave this market. When you think of trying to save 20%, and then in that year that you've been at, the market went up 20%, you're just keeping further and further behind. So
exactly.
This enables them to buy at 3% down and get you in a little bit sooner, which is important.
Yeah.
But then back to the topic of getting rid of private mortgage insurance in a rising market. Let's say somebody does buy with a big private mortgage insurance premium. A couple years are gone by, it's gone up in value. How does the borrower get rid of private mortgage insurance?
Sure. So the easiest way is you just pay down your principal, right, to the 20% mark. And you have 20% equity in your property. That's an 80% loan to value. You call up your loan servicer and say, I would like to drop my private mortgage insurance. That's the simplest thing to do. But it will also automatically drop off once you hit 22% equity in your property. So you're at the 78% loan to value. And how they do that, so when you call them and say, I want to get rid of my private mortgage insurance, they're going to ask you, we need to do an appraisal on your property. So you just have another appraisal done just like you did at the time of purchase, and that tells you what your current value is of the home.
Okay, and so what you just said is it automatically drops off if it reaches 78% loan to value based on the original value that the loan file is closed at, right?
Exactly.
So that's the appraisal amount, not necessarily the purchase price?
That's correct. It's the appraisal amount because lenders lend on the lesser of the appraised value or the contract price.
Okay, so if our clients think that their loan to value has dropped to 78% of the original appraised value when they closed the loan, and it hasn't happened, they should call their lender right away to get their mortgage insurance.
Exactly.
Right. Okay.
Yes.
Okay, and then if let's say that in a Boulder market where values have gone up so fast,
right.
And let's say it's gone up 20% in a year, which it has in some years here, how does a borrower deal with getting the private mortgage insurance removed? When they've only owned it a year, but the values have gone up so much.
Sure. So it's going to be the same process. I mean, they're going to call first. I would say reach out to your agent, maybe that sold you the property, or an agent, and have them run comps on the area so that they can tell you what they think the value of your home is now, and then take those comps, take that to your current loan servicer investor. So you have those comps in hand and say, here's the reason I have to believe that I have the equity in my house. And then they'll be able to get that appraisal ordered for you.
So by talking to their RE/MAX Boulder agent, hopefully right off the bat, that'll give them an idea of whether it's worth spending the money for the appraisal if it appears to be in that category.
Exactly.
And they can petition it from there. Okay.
Yeah. And I will just say one more thing. The equity in your home, you can get that, right, 3 different ways. Sweat equity, so home improvements.
Okay.
You bought a fixer-upper and you've remodeled the bathroom and the kitchen or whatever.
Perfect.
And then paying down the principal. So if you're applying more towards principal each month, which a lot of people do that these days, that's a way to get your PMI dropped earlier. And then the third is just what we've been talking about, market appreciation.
Perfect. Okay, now we have been talking all about conventional loans. What if somebody has an FHA loan? Does this whole thing work with FHA loans?
It doesn't work with FHA loans. Most of the time, FHA loans, you're putting down 3.5%, and right now that mortgage insurance is for the life of the loan. So you would actually need to go through a refinance to get the PMI removed.
And on the conventional ones, one way to get rid of
Mm-hmm.
of the PMI is also to refinance, right?
Right, yeah.
But disadvantages there?
Well, for a long time, the advantage was to refinance because
Right.
then you were getting a lower interest
rate,
rate.
right.
Yeah, but right now, when we're seeing rates rise, it's more to your benefit to first call your servicer and say, I need to get rid of my private mortgage insurance, but I have a rate of 3.75. You don't want to lose that rate with a
Okay.
refi.
Right, and then you start over too. You add months onto the
That's
end.
right. Yep.
Okay, any other thoughts on PMI?
Whew, I think we covered it.
Okay, well, hopefully you got some tips out of this to maybe save a few dollars if you're able to remove private mortgage insurance from your current mortgage. Jessica, thanks for the tips. Appreciate you
Thanks,
being
Duane.
here today. Duane Duggan, Remax of Boulder Video Podcast, signing off.